Now starting. All attendees are in listen-only mode.
Hello everybody, welcome to join our Value Investing Online Masterclass. And this program is organized by Wealthford and in collaboration with Masterclass. We want to thank Masterclass for putting in all the marketing effort to help us to get everybody to come today, Value Investing Masterclass. Now, before we begin, just want to check if we're speaking a right group of people. Now, if you are here because you want to learn how to create more wealth in the stock market, can you please put out your hands? All right, now raise your hand if you're here because you want to learn how to create and have more freedom in your life through the stock market. All right, excellent. Now, I want to first of all congratulate all of you for coming in to our Value Investing Masterclass. Now, even though we are virtually online, but I appreciate it if you really put out your hand just now, and I want to congratulate you for making your time to come to this masterclass. Now, I know that you're all very busy, and I promise you that I'll do everything within my power to make it well worth your time. Now, today, we are going to talk about how to achieve 10 to 30% return in the stock market every single year without the risk of losing your hard-earned money, even if you have no financial background. Now, I'm guessing that for some of you here, this is probably not your first webinar or seminar on stock investing. Now, the first thing I want to mention is that if you have failed in the past in stock investing, it is not your fault, because many times there are a lot of information out there and it can be confusing, and many times this information overload will keep you from being successful. Now, if you have concern in the past that you just can't succeed with stock investing, I want to put those fears to rest, because you just need the right mentor. Because when you have the right skills and right mentorship, you'll be able to excel and succeed in stock investing. Now, I know you have your goals for coming here online to learn, be it to learn how to make more money in the stock market so that you can get yourself a better lifestyle, so that you can send your children to better school, so that you can have more money to improve your health and your wealth, improve your relationship, and ultimately maybe fire your boss and become financially free and independent. And today we're going to show you how you can do exactly that through the stock market. Now, here is my bold promise. Number one, you will learn this widely known but little understood strategy called value investing. And number two, you'll learn how to compound your money steadily and safely in the stock market. And who is this for? This is designed for new investors as well as retail investors, or literally anyone who wants to learn investing. So please make sure you stay true with this online masterclass. Now, if you implement the ideas and the strategy that we share in this webinar, you'll be able to compound your money safely and steadily in the market, and the next time you won't feel fearful anymore in the market, because if market crash, then you'll be able to see opportunity and pick out the good stocks in a bear market. So next time you won't feel fearful anymore about the stock market and gain good confidence in the stock market. Now, allow me to introduce myself. My name is Xuan Chu. I am the founder of Wealthford, and I've appeared many times on media to talk about value investing and stock market. And this is me when I was 23 years old, when I was interviewed on a BFM. Now, BFM 89.9 is a business station, mainly in the Klang Valley. It's very prominent business stations in the Klang Valley. And when I was 23 years old, I was already interviewed on the BFM. And subsequently, here are my many media interviews that covers the topic of investment, economy, financial education, as well as personal finance and money management for a young investor as well. So now, this is really what I do. I am an educator. I teach people in the area of stock market, and I have worked many times with the corporate clients, financial institutions, as well as the stock exchange at Bursa Malaysia, and I do training for the investment banks clients as well. And so far, I would say a quarter of the Bursa Malaysia financial education program is run by my company and I. So I've also done many sessions for investment banks, so much so that the Kenanga Investment Bank featured me on their corporate website. I trained some of their clients in stock investing. Now in 2014, I had the opportunity to represent Malaysia, to go to New York City to give a speech about financial education in Malaysia. And in fact, that was my second time to be in New York City. And when I was there, of course, I took the opportunity to visit one of the most famous streets in Manhattan. Guess what street it is? This Wall Street, right? If you look at the bottom right, you see me, that's me at Wall Street with the most famous bull in Wall Street. In fact, it was, I think, erected in 1700. And this bull brings the optimism to the people and the traders in Wall Street. And if you want to connect with me, you can go to Facebook and find Shane Chu 7. That's how we can connect with me on Facebook. And in fact, on my Facebook page, I share a lot more about the stock market and the economy and what is happening around the world, and not only in Malaysia, but also in a foreign country as well. And if you follow me, then not only will your financial intelligence skyrocket, but also moon rocket and sun rocket, okay? Now, this is what not many people know about it. I actually don't come from a very rich and wealthy family, and this is where I grew up. Okay, I grew up from this beautiful island called Penang. Okay, and this is where my family and I stayed in Penang. And when I was little, my mother told me that this is a condo, so I thought it was a condo. But when I was sensible enough, only I realized that it is a low-cost flat. Okay, actually I grew up in a low-cost flat. And this is me when I was young, and my father was a blacksmith. Okay, he was very skinny, about 5'3", and with yellowish teeth. So he went from house to house to help people to repair their roof and then to build their gates. So sometimes when he was shouldering the metal dust would go to the eyes, okay, and become very painful. And my mother, on the other hand, worked at an open space car park. Now during those days, there weren't a lot of auto ticketing machine and auto gate. So what my mom had to do was literally go from car to car to collect the parking fare. And sometimes during the heavy rain, she had to really work hard. And sometimes she had to chase after the car who sneakily came in from the back gate and left without paying. So life was in this tough for her as well. And they had a son, and I am the only one and the only child in the family. So when I remember when it was a time I grew up, I went to my mom. I asked mom, Mom, can I have a brother or sister to play with? And my mom said, I'm sorry, we can't. I said, why? Because we couldn't afford another one. So so my family didn't even have a car. So the only place that we traveled from one place to another was by motorbike. So we have to go through the heat and the rain on the road. So when I was young, I had to sit in the basket in front of the small motorbike, ferrying 3 persons. So to make things worse, my dad was a spender. And on the contrary, my mom was a saver. So can you imagine when the spender father and the saver mother live together? What will happen? A lot of fight, right? Quarrel, right? So from time to time, I heard them fight. Sometimes from a small argument to a big fight. So, but I was young, I couldn't really understand what they were quarreling about. But what I could barely hear was this word money, 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 mentioned many times in their fight. So when I was young, I learned that this is very important. I learned that money is very important. And I also learned that money has a very special relationship with problem, which is money is inversely proportionate to power. In other words, the less money you have, right, the more problem you have. So I was determined to be rich and successful when I was young. So of course I asked my mom, how can I become rich and successful? And my mom told me that you need to study hard, work hard, get a good grade so you can get a good job and work hard, and then you can become very rich and successful. Now, so I've heed my mom's advice. I studied really, really hard at school, and and even scored 7A in UPSR, 8A is PMR, and 11A is in SPM, and I got 4 flat in my pre-U, and I go to the university of my choice to study the ideal, the course that I applied for, which is actuarial science. So when I go to university, I was very excited because I got my first choice. I got offered a first choice from our national university, and to study the course that I want, which is actuarial science, because I was really good in mathematics when I was in high school, always represented my school in Olympiad math, Olympiad physics, so on. So I decided to do actuarial science. But however, things start to change when I go to university. I started to be exposed to more people. I started to read more books, financial books, business-related books, and I was so engrossed into this book called Rich Dad Poor Dad, and written by Robert Kiyosaki. So much so that I even went to meet him in person in 2012. So I attend his seminar in 2012, and what he shared really blew my mind. Okay, really made the kind of paradigm shift. I had that epiphany, which is that aha moment that everything suddenly makes better sense now. And I realized that whatever my mom shared with me those days when I was young about getting good grades, getting good high-paying job, and is the formula to become rich and wealthy is becoming more and more obsolete. Okay, so I learned that to become truly wealthy and financially free, I need to go to the B quadrant and I quadrant. Okay, I need to either start a business or I need to do investment. So I hit what Robert Kiyosaki suggested. I started 3 businesses when I was in school, but 2 of them failed and 1 still succeeded, and I do it until today. And I started to do a lot more investment. So I joined this financial investment club when I was in university, and when I was a member, we were taught about how to do investment. And when I go to my second year, I became the deputy president of the club, and I started teaching my members how to invest and trade in the stock market. We started teaching how to read financial statements, how to look at the charts, and so on. And we even took our members to go to attend seminars, and so that's how I gained my experience about 10 years ago and started doing investment. So what happened is that when I was in university, I remember when I bought my first shares, I did my criteria on how to invest. The first criteria like this, second criteria like this, third criteria like this, and I run the screener, and I find that there are actually 4 companies that fulfill all my criteria. And I study in depth of these 4 companies. I try to calculate the intrinsic value. I get the cash flow. I project it and discount it back to the net present value to see whether they are overvalued, undervalued. And eventually, I found that there's this company that is worth to invest in, and I put all my money into that company, because when I was a university student, we didn't have much money to begin with. So a couple of thousand, and those are from my PPTN money. So I put all this money into this company, which is a Sarawakian construction company. And I was very happy because that was my first investment, and I let the time to compound my money. So what happened then is I went to United States to further my study in business, and when I returned from America, it's after 1.5 years, then I noticed that my investment did not grow. In fact, what happened is that it went south and goes sideways. So, and I decided that this company is no longer worth to hold on. Then I decided to sell off my company and take a minor loss in it. So I was a little bit more puzzled because I was quite confident. I thought that I learned so much more about stock investing, I should be able to succeed. But apparently I was wrong. So my first investing experience didn't turn out really well. So I decided that I want to learn from the best in town. So I started enroll myself into stock investing class, and not only stock investing, I also want to learn a bit more about other financial instruments as well. So I enroll myself into other financial instrument classes. So I learned about futures, I also learned about forex trading, I learn about CFD. In fact, I learned from not only the Malaysian gurus, I learned from gurus from Singapore about option trading, learn from futures trading from Hong Kong, learn from my teachers from America as well. So I learned from some of the best teachers in the different fields to teach us how to do investing and do trading. And eventually I clocked in the hours to practice trading, to practice investment, and I found that for myself, there's one instrument as a class that really suit me, and the style that really suit me well is actually stock investing. Okay, I noticed that for my style, stock investing really worked well for me, but not stock trading and not futures trading and so on. So I found my niche and really clock in the hours to study companies' details, study company fundamentals, and so on. And eventually today, I'm really proud to say that I can achieve consistent return from the stock market. And today, I share a lot more of my ideas and strategy with the retail investor, so much so that I've trained many clients from the investment banks and helped Bursa Malaysia to train many retail investors in stock investing. Today, we have trained more than 10,000 retail investors from the stock market. And in fact, the highlight of my life came when I was acknowledged by President Obama in my work as a young leader in financial education. Now, when I share this photo, maybe there are some people will say that, no, this is from Madame Tussauds, okay? But to show that this is not Madame Tussauds, here's the next photo, okay? We can move on, all right? All right, so joke aside, the point that I want to make by sharing a bit more about my background is that investing is a learnable skill, okay? Investing is a learnable skill. Now, even though for somebody like me who came from a very humble beginning, where literally my parents never really teach me about money, teach me about investing. In fact, the number one thing that my mom taught me about investing is risky, okay? So even somebody like me who had zero background about investing, about finance, we are able to do it because we really study well. You can do it as well. So long that you put in efforts, you can do it. Okay? It doesn't matter about your background. So investing is definitely a learnable skills. Now, what I want to share about is how ordinary people invest in stocks. You know, ordinary people invest in stock because they listen to tips. Okay, they listen to tips, and they heard that some of them tell them, oh, this company confirm make money. So when they say confirm make money, then they go into and invest in this company. And what happened is that maybe the company make a bit more money, the share price go up, but then didn't sell, didn't take profit, but the share price come crashing down, and then they start to sell. And that's when they realize their losses. Okay, so most retail investors didn't make much money in the market. In fact, most retail investors lose money in the market to more experienced retail investor and to more experienced institutional investor as well. So the point I want to put across today is that by listening to tips will not help you to become successful. Okay, if it did, it is only very short term. Okay, to achieve consistent result, you need to be educated. You need to be enlightened, to be a informed investor. Because think about it, when the tips reach you, right, it is probably recycled, 100 times, okay, or 1,000 times among people who have a faster access to information, among people who are more experienced, or among people who have a closer network to the information source. Okay, think about it. Retail investor, are we Tan Sri or Dato Sri level kind of people? No, we are not, right? Now, unless you are really high net worth, you're surrounded by a number of private bankers, and then they can relay the news to you faster, then the tip may be more reliable. So the point here is that by listening to tips will not ensure that you will succeed, okay? But it doesn't mean that you should not listen to it, but it just means that when somebody tell you this company confirm make money, right? What you need to do is not to blindly follow, but to do your due diligence, okay? Do your due diligence to see whether the company is really as good as they claim or not, okay? Now, if you don't do that, then you'll probably become burned in the market. Now today, I'm going to share with you how extraordinary people invest in the stock market. So look at these people, okay? Warren Buffett, Christopher Brown, Peter Lynch, Seth Klarman, okay? What do these four people have in common? The answer is that they are all really wealthy, right? And they are worth hundreds of millions of dollars, if not billions of dollars, okay? So they have, another thing they have in common is they are all value investors, okay? So you may ask me, value investing can help me become successful or not? The answer is, of course, because look at all these people. Have they become really wealthy? Yes, they are, okay? They are worth hundreds of millions of dollars or even tens of billions of dollars, okay? So you see that they have become successful, so there's no question whether value investing can help you become rich or not. It definitely can. You just need to practice this, okay? And today is exactly why we're going to dissect these people and share with you the strategy and what is value in investing. Now, because of time constraint, I only have an hour and a half to you today, so I can't share too much with you. So I will limit it to 3 secrets of my entire system of how you can master value investing. Now, the first secret I want to share with you in today's webinar is how you can compound your money safely through investing. And secret number 2 I'm going to share with you is how to reduce the risk of investing without having to monitor your portfolio day and night. And third is how you can achieve 1 million ringgit portfolio with just a fraction of your income. Now, are you ready? Let's go. Now, secret number 1, how to compound money safely in the market is you got to pick the right asset class to go in. So look at these asset classes. We have equity, commodity, bond, currency, property, okay, which is the best performing asset class. Now, in my research, I study commodity, bond, currency, property, and equity, and I noticed that only this asset class through the history of times really compound at a faster rate and a higher rate, and that is the stock market, which is the equity market. So if you look at the equity market, let's take a look at the 500 largest companies in America. This is the Fortune 500 companies listed in S&P 500 in New York. So if you look at this S&P 500 over the past 80 years, okay, over the past 70 years, we notice that S&P 500 grow at compounded annual growth rate of 7.72%, okay? And no asset class can achieve this kind of return consistently over the past 70 to 80 years, okay? Not property, not commodity, not currency, not bond. It is only the stock market. If you hold it long enough, stock market can really rally so much more, okay? So, and the good news is that we did not even factor in a dividend yield yet, okay? So how much dividend yield can a Fortune 500 companies give you? Probably at least we can expect 1 to 2%, right? So let's just conservatively think it's 1.3%. If the dividend yield is 1.3% a year, then your compounded annual growth rate is at least 9% a year. And no asset class can give you 9% return consistently every year over the past 70 to 80 years. Okay, only the stock market. So can stock market make you money? It definitely can make you money. Okay, you just need to learn the strategy to how you can make so much money from the stock market. Now, so when I talk about stock market, the first definition when you want to get it right is what is stocks, what are shares. Now, shares are literally an ownership of a company. So when you buy into shares, we actually buy into an ownership of a business, of a company. So I want all of you to treat investing in stock market like you invest in the company, not treating stock market as a casino. Okay, you need to treat the stock market when you invest in a company. You need to treat yourself as a partner, as a shareholder, as an owner to the company, not like simply today buy, the next day sell. This is trading. Okay, so today we're going to talk about stock investing. Now, why you need to do stock investing? Firstly, is low capital costs. How much money you need to get started? No, you don't need a lot. So long that you can afford to eat McDonald's, can afford to drink Starbucks, you can invest in stock market. So take a look at this example. Inari, which is a Penang-based company in doing chips, supplying chip to Apple. So you look at this company in April 2013, it is 10 cents. If you hold it until June 2018, it's 2 ringgit 26 cents. So your money is compounded 2,160% in 5 years and giving you every year 86.56% return. Now, isn't that incredible? Of course, right? If you look at April 2013, it's only 10 cents. If you buy one lot of Inari at 10 cents, which is 100 shares at 10 cents, it costs you 10 ringgit, plus all the brokerage fee and stamp duty and so on, probably 20 over ringgit. So long that you can afford to drink Starbucks, you can invest in the stock market. So everybody can get started. Now, total dividend you receive over the past 5 years is you receive 21 times of dividend, amounting to 44.2 cents per share and giving you a dividend yield of 342% return. Now, this is incredible, isn't it? And we haven't even considered the bonus issue giving out in different time frame. Okay, so these are the free shares that are given to the shareholders in 2016, 2017, and 2018. So the second reason why I need to consider stock investing is it's very convenient. So long that you have a device and you have internet connectivity, you can make money anywhere in the world. You can make money in Taiwan, in China, in Shanghai, in Australia, in New York City, where you can drinking a cup of Starbucks in Paris, and you turn on your laptop and you notice that you make money. Okay, no hassle, unlike property investing, which give you a lot of hassle. And in stock investing, there's not much hassle. No need to manage tenants, no need to do renovation and so on. So not much hassle, and highly liquid. You can buy and sell really fast in the market. When you need money, quickly sell. Okay, you can quickly raise the money when you need it. Okay, and because every buyer and seller of a listed company shares will be aggregated at one place, and that is the stock exchange. So for you to buy buyer and seller, for you to find buyer and seller, it is not hard. It is very easy and low cost. Okay, the cost of transaction to acquire the asset is very low. Okay, for example, you consider property. When you want to buy property, you need to pay agency fee maybe 2 to 3%, and not to mention about the stamp duty, the insurance, the MLTA, and then the loan agreement fee and so on. Easily 5-figure, right? When it comes to stock investing, the cost of acquiring the stocks is very cheap, 0.1% for brokerage fee. It's really cheap. Okay, so this is low cost to acquire the asset. And then passive income. When the company makes money, they declare dividend to you on a regular basis. You can have passive income, and you can have capital gain. Okay, it's a profit when you buy low and sell high. Is capital gain. And lastly, is you own a company. You can attend the AGM to vote for the resolutions that you think favors you or favors company. So now, one concept I want to clarify is what is the difference between trading and investing. Today we merely talk about investing. We don't talk much about trading. And trading, in my opinion, is very short-term and very dangerous. Investing is more long-term. So investing is like we invest in good company, we let time to compound our money. And trading is we try to time our money and flip it as fast as we can. So trading to me is very dangerous. In fact, in trading, right, 90% of retail traders lose money in the market. Okay, it's only the 10% who are very disciplined can succeed in trading. In trading, you need to have 10 times more discipline than average people. Okay, so trading is also very time consuming. So you need to really monitor the charts. Okay, look at any indicators that can signal you there's opportunity to buy and sell. So trading is very time consuming. It often involves the use of multiple indicators and which you need to master. All right. So if for people who have a full-time job, maybe trading is not so much for you because we may not have the time to really trade day in and day out of the market, and it can cause you emotional, more stressful as well because you got to look at the chart, very pay close attention from 9 to 5 and find the smallest to go in. So when the stock price move up one tick, you quickly chase in, and so that you can sell at 3 ticks later. So this is the kind of stress that it may bring about. For me, trading is number one. Not many people can succeed unless you have a really high discipline, and majority of traders lose money, and it's very time consuming, give a higher amount of stress. But compared to investing is more retail investor can succeed than trading when retail trader want to do it. Okay, investing is literally, so long that you buy into great company, we let time to compound our money. And the secret to how to compound money safely and steadily in the market is through this strategy called value investing. And before we talk about value investing, we must firstly get the definition of investment right. So, and I want to coin this gentleman who is Warren Buffett's guru, and his name is Benjamin Graham. And he's the one who taught the world's most famous investor, Warren Buffett, about how to invest in the stock market. And he gave this definition to investment. He said that an investment operation is one which, upon thorough analysis, promises a safety of principal and an adequate returns. In operation not meeting these requirements are speculative. So there are 3 keywords here. Number 1 is thorough analysis. Okay, so when you do investment, you do not do any analysis, thorough analysis. Not only analysis, you need to do thorough analysis. You're not investing, you're speculating. Okay. Now, if the investment do not at least assure you a safety of principal, then you are not investing, you are speculating, because your principal is not assured to be safe there. Okay, you don't even know where the capital go to. Number 3, it must give you an adequate return, because when you invest, you expect a return, right? So you must have an adequate return from the asset that you invest in. So these are the 3 keywords that we must really fulfill when you want to do investment. So any one of them missing is actually you're speculating the market. Okay, you need to do thorough analysis. You need to the asset need to assure you a safety of principal, and lastly, can generate you an adequate return from the stock market. So this is the definition of investment. So having learned the definition of investment, so now we can go to value investing. So value investing, in short, is a strategy in investing. Okay, there are many strategies in investing, and today the reason I want to encourage you to do value investing, because value investing is one of the most proven strategy in the area of generating income or generating wealth to the shareholders consistently over the years, if you approach this correctly. Okay, so value investing is proven to work so long that you really buy into an undervalued company. Okay, so now what is value investing? Value investing is actually teaching you how to buy 1 ringgit worth of stock for 50 cents. Okay, in other words, you can buy stocks at discount. Okay, so when you buy stock at discount, do you really engage in a lot of risk? You actually don't, right? I mean, your risk could be minimized. Okay, so in other words, in value investing can be summarized in this diagram. We are looking for company's value keeps growing up, and want to look for company's price keep going down. And when there's a price and value divergence, we go into the company. Okay, and that's where value investing comes into play. So we want to find a company whose price is trading below their value, and then we buy into it. So the strategy is called value investing. So now, is it really easy to find company whose price trades below value? Does it make sense for the price to trade below value? Now, it is not hard for you to find company which trades below the value. So long that you learn the skill. So in what situation where this kind of scenario can happen more frequently? Okay, is during the financial crisis, because during financial crisis you see that a lot of companies trade below the value. Okay, during a normal inflationary period, we will see company trading fairly value or company trading higher than the value. But certainly there are also companies that trade below their value. So what I need to do is to pick up the skill so that you can find undervalued stock. But during financial crisis, it is like almost half of the stocks are traded under the value. And this is a time for value investor to go in and buy. That's why Warren Buffett said, when people are fearful, you need to be greedy. That means you need to go to the market and pick up undervalued stocks. And when people are greedy, you need to be fearful. Okay, so that's what Warren Buffett said. Okay, and Warren Buffett buy into the market when people are selling it at discounts. So it's like value investing is like you go shopping. Okay, so when you go to shopping, when you see there's a discount, right, you won't go to shopping and say, hey, yesterday the shoe was selling for 200 ringgit, today sell for 300 ringgit, I buy all. It's impossible, right? So you will go to shopping mall, you see that, oh, yesterday the pair of shoes was selling at 200 ringgit, today it sell for 100 ringgit, I buy all, correct or not? So when you do value investing, it's like how you approach shopping. Okay, so you want to go and buy the companies when the price is actually below their value, and you can easily find these companies during financial crisis. So during financial crisis, you don't be fearful. In fact, you should shout, this is the time, okay, inikali lah, okay, go into the stock market and support good company, high quality stocks at a cheaper price. Okay, so that's value investing. So look at this value investing. If you buy a company whose price is below the value, do you have much risk to begin with? You have very minimal risk to begin with. All right, and so in value investing, we actually look for undervalued companies. Okay, get it right. I say undervalued companies. Okay, so those value investing teaches how to buy cheap stocks, cheap companies. The answer is no. Okay, value investing did not and does not teach us how to buy cheap companies. Value investing teaches how to buy undervalued company, and there's a big distinction between cheap and undervalued. Okay, cheap companies may not mean undervalued, and undervalued is definitely cheap in comparison. Okay, so value investing teaches how to buy undervalued company, not cheap company, because cheap companies can go cheaper. So what's the characteristic of value investor? Number one, we select stocks based on value. Okay, we buy stock, the first thing we don't look at is the price. Okay, for many investors, the first thing you look at, wow, Nestle 140 ringgit, expensive. Okay, the first thing is look at Nestle. Why is the enterprise value? Okay, if we look at Nestle, oh, Nestle value is 200 ringgit, now it's 140 ringgit. Is it worth to buy? Oh, of course it's worth to buy. Okay, because the value of the stock is worth that much. So the first thing we approach is not the price, it's the value, and we search for companies whose price is below their value. Okay, we don't buy when the company is overvalued. We buy them when the company is below their value, and we focus on the company and its business. Okay, you see, there are two markets. The first market is the stock market. The second market is the real market. For value investor, what we focus on the real market. We focus on the company and we focus on the business. Okay, we don't care so much about the price, which means the stock market. We only look at the stock market periodically. We look at the business, we look at the company, we look at the sales, we look at the revenue, we look at the profit. So that's what we focus on. Okay, if you invest in Starbucks, we look at, are there more people patronizing Starbucks outlets? If you look at Old Town White Coffee, okay, if you invest in Old Town White Coffee, you see, are there more people liking Old Town White Coffee menu? So so these are the sign that of an investor. Okay, we focus on the company and the business. So what you need as a value investor, firstly, is you need to have simple mathematics literacy. Okay, you don't need an accounting degree. Okay, so you only need to have simple mathematics literacy. Now, what do I mean? No, some people say, oh, value investing, can man, I'm not an accountant. Okay, you actually don't need to become an accountant, because as an accountant, what are you trained on? You are trained to become an expert in bookkeeping, right? To become an expert in preparing accounting statements. But as a value investor, as an investor per se, do we really need how to prepare accounting statement? The answer is we don't. Okay, we only need to learn how to read financial statement. We need to learn how to interpret financial statements. So we don't really need an accounting degree. So no worries, you don't need accounting degree. Now, in fact, like electricity, you don't need to learn how electricity works, right? So long that you learn when you press this on button, the lights will come about. Then, that's good enough. So you don't need to learn how the electricity works, how the circuit works. You don't need to. You just need to learn when you press this button, the light will turn on. When you press this button, the light will switch off. The same goes for value investing. You don't need to learn how to do debit, credit, and so on. So long that you learn how to interpret financial statements, then you're a good investor. And to do that, you need to have simple mathematical literacy. So what is simple mathematical literacy? That means you need to learn how to do plus, minus, multiply, and divide. So long that you learn how to do plus, minus, multiply, and divide, you fulfill the first criteria to become a good value investor. And the second criteria is you need to have common sense. Do you all have common sense? I guess you do, right? And the third criteria is you need to have basic fundamental analysis knowledge. You need to learn how to interpret financial statements, okay, by understanding what does this ratio mean, okay? So these are a few things that you need as a value investor, and most importantly, you need to have time and patience, okay? You need to have patience, okay? Let time compound the money, okay? Don't worry, don't rush, don't rush in, rush out, don't got overly anxious, okay, about trading it, getting it at the lowest price and selling at the highest price. So long that as a value investor, nobody can really time the market. As a value investor, so long that the price trade below a certain percentage of margin of a company, and you buy it with a good margin of safety, and then you should let time to do its magic. Let time compound money, okay? So you need to have time and patience and discipline, okay? Now, you don't need to have complicated charting knowledge, okay? Maybe you just need to have a simple knowledge. For pure fundamentalists, right, you don't even need to learn charting, okay? So you don't need to learn complicated charting, okay? No longer need to do with all the complicated system, okay? So shall we do a few case studies, okay? Now, let's look at this company called Tenaga. Okay, I picked Tenaga as the first company because I think everybody knows about this company. If you are living in Malaysia, you should know about this company. For friends from Singapore, maybe you have heard of this company. Now, so this company is the electricity supplier in Malaysia. And in fact, when we're doing this webinar, we are using electricity as well. So we are consuming electricity, which is we are part of the customer. So back in 2008, December, it's trading at 3 ringgit 85 cents. Okay, until today, it's trading at 14 ringgit and 14 cents. In 10 years, it actually compounded 274%, giving you a compound annual growth rate of 14.9% return a year. Now, when you buy in December 2008 at 3 ringgit 85 cents, in fact, it is literally trading below the net tangible asset per share for Tenaga. I remember that during those days, it was the earlier time when I first started in investment. And I look at the chart more often than now in the market, because I was still figuring out about stock market. I remember that those days, right, the Tenaga net tangible asset per share is about 6 over ringgit. So what is net tangible asset per share mean? It means that when one day Tenaga decide not to continue the business, they decide to close down the business. So they sell off all their assets, they pay back all the liabilities, they sell off all the tangible asset. That means asset they can touch, okay? They sell all the tangible asset and they get back all the cash, pay back the liabilities that the company owe. Every shareholder can take back at least 6 over ringgit. So that's what we mean by net tangible asset per share, 6 over ringgit. So during those days, the net tangible asset is 6 over ringgit, and the share price is trading at 3 ringgit 85 cents. Now, if you buy at 3 ringgit 85 cents, is that undervalued? It's definitely undervalued, isn't it? Okay. because the net tangible asset alone per share is already 6 over ringgit. So this is what happened. If you buy undervalue, are there a lot of risk to begin with? There's not so much more risk. Okay, so if you hold a blue chip company like Tenaga, over the past 10 years, you receive 13 times dividend. It will amount to 2 ringgit, 2 ringgit and 27.5 cents per share, giving you a dividend yield of 9%. And then if you add the dividend yield together, your compounded annual growth rate is 16.68% a year. Okay, so this is buying using value investing approach to buy undervalued company. And we haven't even counted the bonus issue. One free share for every 4 shares that the shareholders hold. Okay, so these are free shares that Tenaga give out. So let's look at another example, Grijaya. Okay, you buy in June 2016 is 1 ringgit and 4 cents. Okay, if you hold until May 2018 is 1 ringgit 70 cents. Okay, that is about 2 years period. So, and not to mention that there are also 2 dividends giving out and the bonus issue for warrants, 6 warrants for every 20 shares that you hold. And the capital gain for 2 years is about 63.46%, and compound annual growth rate is 27.85% return a year. Okay, and the dividend yield is 9% a year. Now, maybe you're not familiar with this company because it is not an everyday, it's not a consumer kind of company. This company is a construction company. Okay, in fact, when we recommended, when we do a research into this company back then, we noticed that this company is trading below the P ratio of 10. Okay, it's about 7 to 8 when the time by the time that we when I bought it is about 7 to 8, and it's definitely below the value because how I look at it is that I noticed that the Prime Minister, our former Prime Minister, is about to call an election in a year or 2, and to have a successful election in favor of Barisan Nasional, you definitely need to have a good economy. And during those days, what can he do? And he can use government spending to boost his popularity and to boost the economy. Okay, so because GDP constitutes of government spending as well, so the more government spends, right, the more robust the economy is. Okay, so if you call election during economy bad year, chances are he's going to lose the election, right? So you definitely need to make the economy robust. So what I can do is throw a lot of projects. So I studied the construction company because I think that construction company will be there to benefit, because as government throw more projects like LRT, MRT, high-speed rail and so on, a construction company will benefit. And I look at this company, construction company, which has a lot of order book compared to the revenue. That means there's so much order book that have not been converted to revenue, and potentially the sales will be coming in, the revenue will be recognized very soon. So, and among all the 28 construction company that I study, I noticed that this company had the highest order book to revenue ratio. And during those days, the P ratio is lower among all the construction company. And with so much order book not yet converted to revenue yet, so and at an extremely high attractive P ratio, which is very low P ratio, it's very highly lucrative for value investors. So I got into this company, and if you do that, capital gain is 63% in 2 years, and you also have free warrant. So this is a warrant that you got, and you hold until May 2018. It is 31.5 cents, and 6 units of warrant give you an additional 9%, giving you 34.8% return a year over the past 2 years. Okay, isn't that amazing? I bet so, right? And let's look at another company, Magni. Now, Magnitech is another company based in Penang. So it is an apparel company. So this is another company that I have a vested interest because I'm an owner in the company. I'm invested in the company. So if you buy in June 2013 at 1 ringgit and 5 cents, if you hold it until June 2018, it's 5 ringgit and 50 cents. Okay, and during those days, Magni, was it undervalued? It's definitely undervalued because the PE is about less than 6. Okay, the price to earning ratio is less than 6. Okay, and the company have double-digit profit growth, double-digit revenue growth, and double-digit earning per share growth as well. And the company is well managed, has command a very attractive valuation. So it's, of course, is very undervalued. So consider the growth rate is considered very undervalued. So if you bought it 5 years ago, your capital gain is 423%, giving you a compound annual growth rate 39% a year. And we take into consideration of dividend, you would in total you receive 13 times dividend, amounting to 88.5 cents, and dividend yield is 64% return a year. So this company is a apparel company. They mainly manufacture and export apparel to Nike in America. So they are one of the Nike supplier. Okay, so Nike is a big company, right? So Magnitech will stand to benefit when Nike business grows. Okay, so this is another company those days that were really undervalued. So I have just done with sharing with you how value investing can help you to achieve consistent return. Look at all these companies. So some are big companies, some are smaller market cap company, but they can help investors like us to achieve consistent return, delivering us 20 or 10 to 30% return in a year. Okay. Now, secret number 2 on how to reduce the risk of investing without having to monitor your portfolio day and night. The answer lies in buying good fundamental company. Okay. So when you buy into good fundamental company, half of the risk is mitigated. Now in investing, right, we need to be like this mouse, okay? These mice. Look at these mice, okay? Even though these mice want to eat the cheese, the mice also wear a helmet, right? Protect themselves. So this is risk management. And the number 1 way of doing risk management is you buy into a good fundamental company. Because so long that you buy into a good fundamental company, you have mitigated at least half of the risk rate. Okay? Now let me ask you this. Is there a risk when you want to cross the road? The answer is, I'm guessing yes, right? So let's say I blindfold you, you cross the road. Is there a higher risk? The answer is yes, there's higher risk, right? Because blindfold and cross the road. But let's say you are not blindfolded and you go across the road. You turn to your left, you see no car, you go across the road. Is there a risk? Yeah, there's a risk, right? Car from the right may hit you. So you turn to the left, you see no car, turn to the right, you see no car, and you go across the road. Is there a risk? Answer is probably yes, right? There could be some pothole underneath the ground and you did not see it, you fall into the ground. If you look to the left, to the right and check the ground, there's no pothole, and you go across the road. Okay, is there a risk? Probably there's a risk, right? There could be some bugger through a flower pot and hit you on the head, okay? So there could be some risk also, right? So in anything that we do, there are also risks, right? Like, but can we say that we don't want to leave the house because there's a risk? We can't, right? Is driving risky? Now, driving sometimes can be risky, risky too, right? Because there could be accidents, But can we say that we don't want to drive because accident could happen? We can't, right? So anything that we do, there's a risk. The same goes for investing. There's also a risk. But can we say that we don't invest because investing could be risky? The answer is no. Okay, why no? Because in today's world, in today's economy, when the economy is bad, the major central bank will resort to printing money. They do quantitative easing. They print a lot of money. So guess what? When the government print more money, when the central bank prints more money, guess what happened to the value of money? Go up or go down? Go down, right? So ladies and gentlemen, brother and sister, you can't afford to say not to invest, because if you don't invest and you keep your money in the bank, chances are your money will become a toilet paper faster than you have ever imagined. Okay, so please, even though there could be risks in investing, but I want you to really approach investing from a perspective that we want to treat investing as safe instrument, but not start investing like gambling. If you trade like gambling, then your risk is 10 times higher than the normal investor one. Now, there are also many people who say that, no, I would rather do property investing because property investing is safer. Okay, stock investing is very risky. It'll probably give us steady appreciation, safe, give me good rental income. I can flip. Okay, stock investing, some people say that sometimes go up, sometimes go down. Okay, it's dangerous. It's very volatile and speculative. Okay, but today I want to debunk this myth, because stock investing can be very safe as well. So let's take a look at the criteria when you invest in property. Okay, when you invest in property, we look at what? Firstly is we look at good location, right? In fact, people say that there are three main criteria in property investing. Number one is good location, number two is good location, number three is good location. Okay, you need to find property in good location, okay, which is very important. And you need to have a high occupancy rate. That means the property that you buy ideally should be 99% or 100% occupied. I mean, high occupancy rate, okay, so that easy to rent out, right? And high dividend yield, okay, can fetch a very good dividend yield to you every year. And you buy below the market value. Now, don't you like to buy property under the market value? So if we use this principle and use this criteria when you do property investing, and we apply it in stock investing, can we get the same outcome like property investing? Probably yes. So let's compare. Good business model. Good location is probably equivalent to good business model. When you buy a company which has good business model, okay, they are profitable company, they are not only profitable, their profit is growing every quarter, it's a good business, okay? High sales turnover, there are a lot of sales, okay, there are a lot of revenue, and high dividend yield, okay, they give you good dividend yield every year. And fourth is below is market value, okay? So when you buy the stock below is real value, then are there a lot of risk? The risk is really very minimal. So if you buy good business model company, a lot of sales, high dividend yield, and you buy the stock when the company price is below the value, guess what? We have turned stock investing to become steady appreciation, a safe asset, dividend income, and capital gain. Remember what I showed you just now in the Fortune 500 companies, the 500 companies in America over the past 70 to 80 years gain on average 7% during good time and bad time. We have also discounted the bad time. Even though the bad time, you hold it through the bad time, you see the strongest 500 companies can deliver you at least 9% return a year. This is a remarkable return, okay, across time, okay. So, and this is the highest, most profitable asset class that you can consider. So today I want to urge you to consider stock investing as an asset class in your portfolio, okay. Now, how do we pick great companies? Number one, must have consistent profit growth. Not only the company needs to be profitable, they need to be growing their profit on a quarterly basis, okay. And number two, it must have little debt, okay. No, the company should not have a lot of debt. Okay, like when you maybe you want to find your spouse, okay. So like for young people like me, would you like to have a spouse like every day come home and say, oh darling, today I have another 1 million credit card debt, okay? You don't want that too, right? I mean, you want to find a company which have little debt, right? Because if the company has a lot of debt, you will also be debt ridden, okay? And the company, when the central bank raise interest rate, then the company will be in a huge trouble because they need to service more interest payment to the bank. And third is strong cash flow. You want to find a company which give you which have a strong cash flow, because when you want to do investments, it's easy, okay? So would you want your darling, which means your spouse, to give you to have strong cash flow when you want to buy something, okay? They can easily buy for you, okay? The same principle, okay? Okay. Number four, it give you good dividend, increasingly more and more dividend. Okay, you want a company every year give you more and more dividend. Okay, last year maybe give you 5% dividend. This year maybe give you 5.5% dividend. Because it's like your spouse. You want your spouse to give you a lot of allowance, right? Okay, give you more and more allowance every month. Okay, so it's the same criteria when you want to look for great companies. Okay, so you want to find a company who is profitable, growing the company, have little debt, strong cash flow, and increasingly more dividends. Okay, of course, I'm taking spouse as a joke, as an example, but this is what we look for when we want to look for companies which show exemplary and growth characteristic, and of course, you want to buy it when it is undervalued. So when you buy great companies when they are undervalued, guess what? You really have very little risk to begin with. So let's take a look at this company. Okay, let's do some case studies. So we look at Nestle. Okay, Nestle, I take 20 years data. Okay, so that we also factor into the bear market. For 20 years, financial crisis happens like every 10 years, right? Every 7 years, 10 years, the financial crisis. So you look at 20 years, they're bound to cover some financial crisis. Okay, so look at Nestle. Over the past 20 years, is the stock price go up? It's go up, right? In May 1998, 11 ringgit 50 cent. Hold until May 2018, 142 ringgit. Okay, that is 1,105% gain over the past 20 years, giving you a compound annual growth rate of 13.4% return a year. And total dividend you receive is 21 times, amounting to 18 ringgit and 76 cents, and dividend yield alone is 163%. See, the dividend alone already more than cover your share price. So I'm suppose most of us here are Nestle customer, right? In fact, I take Nestle product, maybe Milo, a couple of times in the week. So these are the companies that consumers take. And do you see Nestle, being out of business in the next 10 years or 20 years? I doubt so, right? I think Nestle will still be around for 20 more years, because Nestle, in fact, is a century-old company. They've been around for very, very long time. Okay, so Nestle is, for the past 20 years, is growing by leaps and bounds. And in fact, if you look at 2018, is there a huge crash? There's very little crash. There's only a very small correction here. So long that the company you buy, right, is strong company, you see, it can withstand the test of time. Okay, even though during 2008, which is the global financial crisis, Nestle still go down a bit only and then go back up. Okay, so this is really strong companies. Okay, and every one of you know about this company, and in fact, you have used their product before. So let's take a look at another company, Public Bank. Okay, I'm sure you have heard of Public Bank. So look at the past 20 years data. Okay, in 1998, 1 ringgit 50 cent. In 2018, 24 ringgit 34 cent. Over the past 20 years, your capital gains is 2,017%, giving you a compounded annual growth rate of 16.5% a year. Okay, and in total, the dividend you receive is 29 times dividend, is 6 ringgit and 93.5 cents. Okay, giving you a dividend yield of 603% over the past 20 years. Now, isn't that amazing? Yes, right? It's phenomenal. So maybe you say, yeah, I miss Public Bank already. Okay, many people have said that. But in fact, if Public Bank earnings continue to grow, guess what? The share price will still continue to grow. Okay, like Nestle. Okay, when Nestle earnings profit continue to grow, the share price continues to run. Okay, so look at this. Okay, do you think Public Bank will still be around for the next 10 years? I guess so, right? In fact, they are quite strong. Okay, and there was some minor correction here, minor correction there. But if you're a value investor, you hold it over a long period of time, you definitely make money. But most people, right, they buy here, they sell here, because they don't have patience. Even though they buy into great companies, but they say, oh, they are fearful. They say, oh, market correction already, and then they sell. You see, if you hold it long enough, you will be able to make money. Okay, because value investor believe that the true value of the company will be reflected in the share price over a long period of time. Okay, in short, maybe value investor lose a bit of money, but if you hold it long enough of time, the true value of the company will be reflected in the share price. So that's what value investor, how we approach the stock market. Okay, we look at the longer a bit of time frame. Okay, in fact, the reason most retail investors lose money in the market because they look at a very short-term basis. If you hold it long enough, buy a great company, hold it long enough, you should be able to be profitable consistently, okay, in the market. I took another example, Padini. Okay, so I picked the company that you all will be familiar with. Over the past 20 years, look at Padini. Okay, from 8 cent in June 1998 until, if you hold it until June 2018, is 5.68 ringgit. Okay, so giving you a capital gain of 7,000% and a compound annual growth rate. That means on every year you're making 23.8% return in a year. Okay, total dividend you receive is 1 ringgit per share, and it's about 32 times. Okay, if you just imagine you buy at 8 cents per share and you get back 20 years later 1 ringgit in dividend per share, giving you a dividend yield of 1,150%. If you add together the dividend yield of 1,150% into the capital gain, total gain is 8,150%. Your compounded annual growth rate could be more than 26% return a year. Okay, which means you could probably double your money every 3 years by investing in Padini. Okay, so this is a phenomenal result. So do you think Padini will be out of business in the next 10 years? I think Padini will likely still be around for the next 10 years. Okay, so these are an example of great companies. So long as you buy the great companies, you see, there's literally a very minimal risk if you hold it long enough. Okay, so buy into good business model, profit growth is strong, high dividend yield, and then strong cash flow. And these are some of the companies that will withstand the test of time. Okay, so to sum up, the secret number 2, which is how to avoid monitoring your portfolio day and night, is that you need to buy into good fundamental company, because by doing that you would mitigate at least half the risk. And I want to sum it with Warren Buffett quotation, and quote, he said that risk comes from not knowing what you're doing. Okay, if you know what you do, it's not risky. Okay, if I ask you to drive a F1 Formula car, is that risky? It could be risky, right? Driving at 200 over a kilometer per hour, it could be risky. Okay, now if I ask Michael Schumacher to drive a F1 Formula car, is that risky? It may not be so risky for him, right? Because he's trained. So long that you're educated, you're trained in stock investing, you'll be able to mitigate the risk. Okay, so risk comes from not knowing what you're doing. And secret number 3, how to achieve 1 million ringgit with just a fraction of your income, is that you need to have effective money management. Okay, when you have effective money management, you'll be able to get 1 million ringgit portfolio in with just a fraction of your income or your salary. Okay, you see the difference between the rich and the poor is not how much money, so much more they make. It's how much money they can keep, they can invest, that makes a difference. Okay, so if you want to have become financially free, you need to have effective money management. Okay, so because some people could be making 20,000 a month, but they spend 40,000 a month. Okay, are they wealthy? They are not, right? Because they make 20,000, they spend 40,000 a month. But some people could make 5,000 a month, but they save 2,500 a month. So which one is wealthier? The person which can save 2,500 a month, right? So if you can save 2,500 a month, you're way better than people who have deficit 20,000 a month. So that's why the key to getting a 1 million ringgit portfolio with just a fraction of income is to have a good and effective money management. And may I share with you a surefire way to become a millionaire? Okay, every year you invest 20% of salary that grows at compound annual growth rate at 15% return a year. So for example, you get, let's say you get 100,000 ringgit salary a year, then you set aside 20,000 for investment, and investment grew at 15% a year. So like that, it's a surefire way to become a millionaire. So for example, let's say you're a young graduate, you have 3,000 ringgit a month. If you make 3,000 ringgit a month, you actually, in 1 year, you will make 36,000 ringgit a month. So if you set aside 20% of 36,000, it is 7,002. And in 1 year, you grow at 15%, your 7,200 ringgit will grow to 8,280 ringgit. So your portfolio will gain 15% return. And next year, assuming that you have 5% salary increment, okay, because it can't be that your salary stay there forever, right? It's 3,000 forever. There's bound to be a salary increment. So let's say you only grow at 5% salary increment a year. So next year, your salary becomes 37,800 ringgit. So invest 20% of 37,800 ringgit into your portfolio. So you set aside 7,560 to invest, and your portfolio together grow to 18,216 ringgit. And year 3 and year 4 follow suit, okay, and set aside 20%, and your portfolio grow at 15%. Okay, and at the end of the 13th year, your portfolio will become 353,000. And by the end of 20th year, you'll achieve 1.1 million. Okay, and then by the time you work 30 years, your portfolio will become 5 million. Okay, and that is assuming that your portfolio achieve 15% return a year. Now, if 15% return a year achievable, it is definitely achievable. Okay, it's definitely achievable. If you buy into a mix of growth stock and a value stock, a mix of growth stock and the blue chip stock, you should be able to get at least 15% return a year already. Okay, so it is definitely achievable target. But if you're a better saver, you can invest 40% of your salary. Okay, then you can achieve it faster. If you're a better investor, then you take a bigger risk and achieve a compound annual growth rate of 20%, you'll be a millionaire in 17 years with just a starting monthly salary of 3,000 ringgit. So every one of you here will be a millionaire. Okay, every one of us can be a millionaire. It's just a matter of time, how fast we can be a millionaire. But to become a millionaire, first you need to have good financial habit. If you have bad financial habit, you definitely can't become a millionaire. The moment you spend more than you earn, you very hard can become achieve a wealth of $1 million. So why we need to do value investing? Number one, let me sum up. Value investing is one of the surest way or proven way that can generate you consistent money and return in the market. It's time tested. Many famous investors in the world use it and help them to generate tremendous wealth and enormous wealth in the for themselves. So it is one of the surest way and safest way that can help you to compound money steadily in the market. Okay, no question asked. Number two, help you to save time. You don't need to really spend time observing the market every day and stress yourself like that. So if we just let time to compound your money, let time to do the magic. Okay, we let time to compound our money. Number three, it gives you a peace of mind. Okay, you can sleep soundly at night knowing that you invest in great companies, even though the share price could go down, but no risk. If you hold it long enough, the share price will eventually go up because as an investor realize the true value of the company, they're willing to buy in more and to support the share price to go up. So you can sleep soundly at night. If you engage in dangerous and highly speculative trading, sometimes at night you have nightmare, okay, you can't sleep well. Okay, so this is what the benefits of value investing. Okay, and for value investors, we are all a group of very happy people because good time, bad time, we are happy. Why? You see, market downtrend, are we happy? We're happy. Why? Because we can go shopping, we can back up the truck, right? We can go to the stock exchange and buy undervalued stocks. Okay, so we are very happy with downtrend. Okay, in fact, we hope for more downtrend to come. Okay, so what to do in uptrend? Okay, we chill and and make money. Okay, let time compound money. And what to do if it's sideways? We collect dividends. Okay, we also happy. So downtrend we're happy, uptrend we're happy, sideways we are equally happy. Okay, so it's like look at all the world most successful value investor. Are they all happy people? Look at Warren Buffett. Okay, look at his smile. Okay, so happy, right? Look at Charlie Munger, Warren Buffett's partner in Berkshire Hathaway. Okay, so happy, right? Look at Avin Khan, the longest lived value investor in the world. He passed away at 109 years old, and you see how healthy and how happy he is, live until 100 over years. So in fact, you see, value investor are a group of people who are very happy and live very long. Okay, look at Warren Buffett, 88 years old, every day eat McDonald's and drink Coca-Cola. Okay, but still can live until 80 over years old. Okay, Charlie Munger, 93 years old. Okay, Ivan Khan, 109 years old. Okay, so you see, all value investors can live happily and live very long. You know why? Because they don't have so much stress. Okay, we are a group of very happy people, happy investors. Good time we happy, bad time we happy, sideways we happy. Okay, so that's why I want to encourage you to become a value investor. Now, how many of you here are excited about value investing, like what I've shared earlier on? Okay, if you're very excited, I want to share a program that I have designed, and I want to urge you and encourage you to join our Value Investment Maven program. This is a program that I've spent a lot of time and efforts to design and to come up with the content and to polish it. And this is a program that will delve in depth to talk about how we can do value investing. Okay, now may I spend 20 minutes to share with you about this program, shall we? So now the goal of Value Investment Maven is to embark you on value investing journey and gain confidence in investing. So that's our number one goal. And number two goal is to mentor you to achieve consistent return from the stock market. So that's our second goal, to help you to achieve consistent return from the stock market. And who is this designed for? This is designed for retail investor, especially if you are a complete newbie. All the more you should join this program. It's designed for students, designed for employees, designed for business owners, designed for housewives, designed even for retirees, literally for anyone who want to create wealth in the market. You want to learn how to create wealth in the market, you should join this program. And the Value Investment Maven program is an online program. Okay, it consists of 7 online modules, which is mobile friendly. You can do it when you are using mobile. You can watch it when you are in LRT, okay? When you are on MRT. You can watch it when you are inside a plane, and so on. So long that you have access to internet connectivity, you can do it anywhere with good internet connectivity. And I'm the trainer in this Value Investment Maven program. So it's a 7 online module. So you don't have to travel from Penang, from JB to come to our class. We do everything online. So these are our module. Okay. The first module, we're going to talk about the basics of stock market so that you can understand completely how the stock market works, learn the different types of stocks, and gain confidence to invest profitably in the market. And if you're a newbie, this module is definitely right for you. And number 2, we are going to cover the language of business. Okay, now, like what Warren Buffett said, if you want to master the subject, you need to understand the language of the subject. Okay, like you want to do programming, you need to understand the language of programming. If you want to be a good investor, you need to understand the language of business. So in the second module, we are going to share with you the language of business so that you can read and understand financial statements, make sense of the number, and ultimately be able to dissect the financial statements to the bone. Okay, so after that, wherever you read about financial ratio, read about certain financial term, you'll be able to understand it well and in depth. Number 3, we're going to talk about value investing strategy. And the third module in our whole 7 module series is the longest series. Okay, we're going to explore case studies in value investing strategy so that you learn our proven 3-step system and 8 quantitative criteria in identifying an undervalued company, find a low risk entry, and maximize your profit in your investment. Okay, so our system is proven and it will help. It's very easy and will be able to help you to find an undervalued company. Module number 4, we'll talk about money management so that you know how to do capital allocation and position sizing effectively and learn how to manage your risk. And in module 5, we'll teach you how to do portfolio construction so that you can build your portfolio based on your risk profile and learn to manage your portfolio effectively. Module number 6, we're going to talk about psychology of investors so that you know how to manage your emotion investing and build a winning investor mindset. And in module number 7, we're going to talk about getting started investing so that you know how to buy and sell stocks in the trading platform, learn different types of trading accounts and the brokerage information. Okay, so all these modules add together is about $1,297 in value. So when you master all these modules, you'll be able to become a successful value investor. Now our system is proven as easy as Lego. So long that you follow our system, first step you do this, second step you do this, third step you do this. After that you do all the 8 criteria, you'll be able to find a company who has good business model, good management, buy it when there's a price is right. So these are our 3-step and 8 quantitative criteria system. It's very easy, simple to follow. Even though you're newbie, you'll be able to understand it. Okay. Now some of our students' testimonial. Number 1, we have students who say that, Shane has taught me a great insight into investing and put me on the right path to make a side income. The lessons were well structured and easy to follow, even to a beginner like me. Thank you so much, Shane. This is from Kobe. And second student testimonial is from KH Wong. Shane has taught me the principle of value investment and how to understand the fundamentals. I'm now more confident in investing in the stock market and know how to dissect the financial statements effectively. Okay, from one of our students earlier on, who now a very good investor. And third is from Ben Tew. After the workshop by Shane, I started to understand the stock market better, especially on Bursa. This had made me more confident to start investing in the stock market. So right after they finish the module, this is what they feel about our program. So a frequently asked question is, I'm a complete newbie. Is it suitable for me? The answer is yes. Even if you're a complete newbie, it is even more suitable for you. Okay, if you're a newbie, this is even more suitable for you, because the language, the case study, everything is done in a very simple manner, so that you'll be able to understand the basic of stock market. Okay, now we want to encourage you to join our Facebook community, because trading alone or investing alone is very lonely. So when you join our Value Investment Maven program, you'll be able to join our Facebook community as well, which we value at $197. And this community, we have students who ask about case studies. Recently, people asked about Gamuda, asked about Air Asia, asked about companies that are hot. We'll do the case studies in the group, and we facilitate healthy discussion there, so you can learn so much more in our Facebook community. This is valued at $197. This is also where I share with you some of the breaking news happening in the market. And coming together in a package, we also give you a VIM investing tools, because sometimes I ask, after they finish the class, I ask them, how do you find the program? After two months attending the program, they say, oh no, it started. Okay, so now to help all of you to start it, I even designed the tools for you. Okay, which I even designed the investing journal and a watch list for you. I also give a VIM investment checklist. I want to simplify your investing journey by giving you all the tools that can help you to save time and save your effort. Okay, wherever you do investing, you just follow our checklist, put your stocks, your research into our checklist, so that the checklist can keep track of your portfolio, keep track of all the stocks that you analyze. And before we had that, I have to literally spend a lot of time to really research and write it on paper. And after I have improved the system on the software, then you'll be able to see the checklist and do it systematically. So next time you can refer back, okay, what are the 3 companies that you researched last year, and then whether they still fulfill your criteria or not. So we even design the tools for you so that it makes it easy for you to do investing, helping you to save more time and save more effort. So these tools are valued at $197. So what you're going to get, number 1, you're going to get a Value Investment Maven online masterclass valued at $1,297. Number 2, you're going to get VIM Facebook community $197, which will facilitate healthy discussion and dialogue, and is a support group. And number 3 is a VIM investing tools, helping you to save time and effort in investing. Total value is $1,691 US dollar. Okay, but the good news I want to bring you today is that I'm not going to charge you or price it at $1,697, because I want to help more of you to join our program. I want to help more of you to enroll into our program, so that you can take away our strategy, our ideas, and this idea will carry with you for a lifetime, okay, on how you can see companies differently and how you can invest and identify companies, great companies to invest in, okay? But if I really charge you $1,691. Would it be worth it? So if I really charge you $1,691, and what it did was to help you to find a company that can double your capital every 4 to 5 years, would that be worth it? If I can help you to find a company that can give you multiple fold in your investment, would it be worth the money? My guess is it's very worth, right? But even so, we also would not charge you $1,691. Today we want to give you a very promotional price, which want to give you an irresistible offer. And because you all tune in today, you all take time off your busy schedule to be with us today in our value investing masterclass, we want to give a special offer to you. Okay, for those of you who are online today, we want to offer it to you at $125 only. And this is today, only for today, by 11 p.m. Okay, by 11 p.m. if you enroll into our value investment Maven, you are going to pay only $125. If you are Malaysians, you want to pay in ringgit, it is only 497 ringgit. Okay, please go to www.valueinvestmentmaven.com/go to register for yourself. And if you are ready to register, please escape this webinar. Please open a new tab, go to www.valueinvestmentmaven.com/go to register yourself. Okay, so this is only for today, and today only by 11 p.m. Subsequently, it's going to be at $225. Okay, if you pay by 11 p.m., it's only $125, and you can have our entire system on how we approach value investing, so that you can know how you can dissect companies systematically and find an undervalued company, invest in it, which does not entail engage you into excessive risk, unnecessary risk by investing in the market. So how much does a stock investment program cost? Okay, a normal stock investment program will cost about 5,000 to 6,000. Okay, some if 3,000, 3,997, some are charging you 6,000, some even charge you 23,000. I've seen program charging at 20 over 1,000. Okay, but for us, our program is only $135. It's no brainer, right? It's so cheap. Okay, and the reason we can do it so cheap is that we are online. Okay, we are online. Okay, so that's why you leverage on technology platform. We cut out a lot of the fixed costs like hotel fee and so on to provide this at an affordable price for you. Okay, so compared to other stock investment costs, ours is really very affordable. Okay, so you got two choices here. Number one, you try to DIY yourself, do it yourself, and probably make some roadblocks and you burn some money along the way. Okay, and number two is, instead of burning this amount of money in the market, why don't you use this amount of money to invest in the program to get a mentor to guide you? So people who have done that, people who have experience in it, a mentor can help you to condense. We condense our experience to share with you our journey, so that you'll be able to accelerate your result by cutting short your learning curve. Okay, by cutting short the learning curve, you can achieve result faster. Okay, if I look back in my investing journey, had I not invested tens of thousands of ringgit into different stock investing program, trading program to find the right niche for me, if I had not have good teachers that guide me, share with me some of the mistakes that they make, okay, I wouldn't have achieved a result so fast that I'm now representing. I'm one of the youngest speaker. I think I'm the youngest, or not one, I'm the youngest speaker ever engaged by the stock exchange, Bursa Malaysia, to do so many more investor education, okay, to teach retail investor how to invest. So I want to encourage you, instead of DIY yourself, burning this amount of money in the stock market, why don't you really invest this amount of money in the training courses that can help you to cut short your learning curve and accelerate your result in stock investing? Because to me, money is essential, but time is essential. Okay, to me, time is essential, because if you can achieve success faster, why not? Okay, if you can go to 100th floor by taking a lift. Why you want to take the staircase? Okay, so in short, I want to share with you is that instead of burning this amount of money by trial and error in the market, why not just invest a few hundred ringgit to join a proper training class and then gain the right knowledge so that you can cut short a learning curve and achieve the result faster. So where we have spent it, we probably spend $125 in a pair of shoes. Okay, so nowadays you want to spend a $100 over dollar, it's very easy. Okay, but if you versus investing it in education, it can feed you a lifetime. Okay, so this amount of investment you do will get you the kind of skills and strategies that can feed you a lifetime. Okay, not only you can use now, but you can use a lifetime. Your shoes can't use a lifetime. Probably 1 or 2 years, you need to change a new pair. But for education, the knowledge you gain can carry on with you for a lifetime. Okay, unlike investing in the asset class, in asset, investing in your mind, in your education can give you infinite return. Not like finite return, 10%, 5%, 15% a year. Education, investing in education can give you 1,000% return, 1,000,000% return a year. Okay, so that's why investing in your own education is very important. Now, I want to encourage people who take action. For the first 10% to take action, these are the bonus lessons that you can get from me. You're going to learn all these bonus lessons, which include understanding market indices sector. You're going to learn basic technical analysis, how to choose the right investing strategies, REITs 101, master financial statements, master financial ratio, introduction to candlestick, how to invest in growth stock, how to invest in cyclical stock, how to invest in value stock, how to invest in turnaround stock, how to identify a sunset stock, and uncover the myth of oil and gas industry. So if you are the first 10% who online today, this total value is $1,261. So if you're first 10% who sign up today, you're going to get these 13 online lessons for free. So these are some of the corporate program that I do, and I package it. I want to make it available to people who sign up today, and first 10% who sign up today, you get these online lessons for free, giving you additional ideas about how to invest in growth stock, cyclical stock, and turnaround stock as well, giving you additional knowledge and idea how to do basic technical analysis. Okay, so this total is $1,261. Okay, so let me sum up our offer today. Number one, you're going to get Value Investment Maven Online Masterclass valued at $1,297. This value investing investment online masterclass will outline with you our entire system and strategy, how we identify undervalued companies and buy into it when they are trading at discount, so that there's not much risk at stake. Number two, you're going to join our Facebook community where we're going to facilitate a healthy discussion about stocks. These are peer-to-peer support group as well as guided by me. And you're going to have the Value Investment Maven investing tools, which can help you to save time and effort to invest. So long as you follow our checklist, step 1, do this, step 2, do this, step 3, do this, and key into our system, then you'll be able to help you to save time, and you can cross-reference back your research many years later. So this tool will help you to save a lot of time when you do investing. And lastly, if you're first 10% who sign up today, you're going to get additional 13 online sessions, talk about different investing strategy in different financial instrument, different characteristic of stocks. So it's valued at $1,261, bring us a total value of $2,952 for an entire Value Investment Maven program. But today and today only, before 11 p.m., it is only $135 US. So I want to encourage you to sign up today. Please go to www.valueinvestmentmaven.com/go to enroll yourself into our program. Before 11 o'clock is $135. After 11 o'clock is $235. Right? If you're ready, please can exit this webinar and go to open a new browser, go to www.valueinvestmentmaven.com/go. Okay? Now, here are some of the frequently asked questions. Number one, what are the likely results that I can achieve? Now, if you follow exactly our methods, you should be able to find an undervalued company. And if you find an undervalued company, we are expecting about 10 to 20% return a year, portfolio return a year. Okay, so if your portfolio, if you are very conservative, if you want to go for blue chip stock, you are likely to get about 12 to 15% a year. Okay, if you have a mix of a blue chip stock and a growth stock, then you can get about 17 to 18% a year. But if you are more aggressive, you want to buy undervalued stocks that have a bit of growth nature, then you should be able to get over 20% return a year. So these are some of the likely results that you can achieve if you follow exactly what we share in our Value Investment Maven program. Number two, where I learned about charting. Now, in Value Investment Maven program, they are very minimal about charting. We'll share with you how you can look at the basic charts so you can understand what price is trading at, what is volume, just basic charting. It will not be in-depth charting. If you want to learn in-depth charting, if you join your first 10% to join our program, you get a session on technical analysis. Then that one will cover a bit more about technical analysis, okay, about charting. So in Value Investment Maven, very minimal about charting, because in fact, as an investor, we don't really need to rely on charts so much. We just need to pick up basic elements of charts. Number three, can I apply it at other stock markets? Yes. When you learn Value Investment Maven program, you can use the same strategy in Singapore Stock Exchange, in New York Stock Exchange, in Hong Kong Stock Exchange, in Shenzhen Stock Exchange, Shanghai Stock Exchange, London Stock Exchange. You can apply in any other stock exchange. The principles remain the same. Number four, I only have little saving and capital. Should I join? If you have only little saving and capital, all the more you should join, because other investment classes are so much more expensive. They're at least 4,000, 5,000, 6,000, 20 over 1,000. Okay, so and this is a program that is very affordable. That is only $135. For Malaysian, you can choose to pay in Malaysian ringgit is 497 ringgit only. Okay, so if you have very little saving and capital, all the more you should join. Okay, because as a beginner, okay, this is a very suitable program, if especially for a beginner. Okay, if you want to, if you see that if you're a beginner, you are considering little capital, I encourage you to join this program, because by gaining knowledge now, and when you increase the income capacity, maybe 5 years later, when you have more and earn more money, then you'll be able to compound your money faster. Okay, so that is it from me on our Value Investment Maven program. I hope that all of you can join me in the Value Investment Maven program, because I promise you that this program is going to be very beneficial and transformational. And you join this program, you're going to learn our entire system of how we invest in stock market using value investing strategy, by picking undervalued stocks, by picking stocks that are trading well below their value. And that way, we do not engage ourselves with a lot of risk in investment. And then it's one of the surest way that if you put it long enough, it can help us to get consistent return in the stock market. With that, thank you so much for being a wonderful audience today by tuning in into our Value Investing Online Masterclass. And my name is Shen Chu, and I'm signing off today. And I believe that my job today is done. Maybe yours has just begun. Okay, with that, thank you so much, and I hope to see you at our Value Investment Maven program. And until then, see you again. Thank you, and hope to see you there. Okay, for the rest of you, have a pleasant rest of the day.